Rothy, why don't I go first here? We're actually live here, so we'll give everyone a few minutes before we formally kick this off, just for people to come on in. But as people are strolling in here, Ryan, where are you at right now?
I'm in the California wine country. I don't always sit under fancy umbrellas like this, and I'm not in the wine country often, but we're doing a little celebration of our parents and their 40 years of marriage.
Love it.
Oh, nice.
Love it.
Amazing.
Love, that's the only thing greater than Bitcoin.
Rothy is also in a hotel room. So we have people, and Jody's flying right now. So you got myself, and we're going to be interviewing or talking with Adrian Morris here today. Obviously touch on MicroStrategy or strategy. Huge week. Obviously we got the Bitcoin all-time high. And now we've seen prices since we haven't seen in 2 days now. So things are going crazy at, I think it was 121 when I last just checked. But Adrian, how have you been? It's been a few weeks, I think, or maybe a month since we brought you back on here. So first time on the Treasury Talks show. So welcome.
Thanks for having me. Always glad to have conversations with you and the team. So let's see where the conversation takes us.
Of course. So I guess to kick things off, what have you been watching recently? I think I just got off a call too. We're talking about some of these treasury companies where you're starting to see a lot of them come down, right? Strategy obviously is the whale or the biggest ship in the game here. But overall, you go on Twitter, it feels like a war zone. People are now fighting with one another. You're kind of the steady Eddie of the group. I always feel like. What are you seeing? You're very, you're very temperate, if you will, and you're even keeled. But how do you see the marketplace just overall right now? And then we'll get more into strategy, of course.
I think the marketplace is showing. So we have to take a few things into account here. Everyone's looking to November 2024 as some kind of a benchmark, right, as to where we should be going. But I don't think that makes a lot of sense. We are in an entirely different economic landscape, both macro and micro. We are also in an entirely different liquidity environment, and we should be entering into a more favorable liquidity environment. But if you take a look at May, June, July, August, September, those are typically months where, with the exception of July, Bitcoin doesn't really perform that well. Historically, I know that there are certain trends that get broken, but overall, that's the general trend. And they say sell in May and go away for a reason. The summer months are usually more of a doldrum series of months where you can see things breaking out, the AI trade, if the narrative is strong enough. But without enough of a strong narrative, the market's not going to move. And what I've been trying to help people understand is that my view is that markets move on sentiment and then they move on liquidity in that order. And I think that people have this traditional finance view, even though they claim to be Bitcoiners, that everything is fundamentals, when it really, really isn't when you sit down and you break down how things trade in the markets. So understanding that sentiment's going to shift and understand that there's going to be different regimes and understanding that there's going to be different liquidity impacts on the market, I think helps give someone a more broad view. But you have everyone that's being very, very tunnel vision right now. And I think that's causing a lot of the, as you said, infighting in the community right now.
And I just want to pull up a quick tweet, and then I'll let you go, Rothy. You tweeted this on October 6th, right? The divergence of BTC and MSTR. And I'm sure for you kind of get bored saying the same thing over and over again because you go on different podcasts and have these conversations. But it is interesting to bring this up, right? And my friends, that are not Bitcoiners, that fly by the wind on a lot of their investments, they're just going back to, why don't you just buy Bitcoin? Clearly, MSTR has been going down, Bitcoin's been going up. What's the point at all, right? So can you just touch on this tweet a little bit further and explain for a lot of our audience why this is happening and what are your expectations, I guess, for the rest of the year?
Sure. So let me give some context into the charts, and then I'll give some context into the tweet. The charts that I've been sharing the last few months are actually charts I've been doing on my own for about 2 years now when it comes to strategy, and when it comes to Bitcoin. So what I'm essentially doing is I'm taking the data. So that's strategy price data. That's Bitcoin price data. That is volume data. That's of course the dates to determine the periods. And I'm essentially trying to find the correlation in price movement between Bitcoin and MSTR. Some people like the IBIT Bitcoin ratio, the IBIT MSTR ratio. I prefer to do closing price of MSTR and closing price of Bitcoin on any given day to mark my analysis. Just because with IBIT, even though it can have a tighter price range in terms of how equities trade, there's still going to be a lot of slippage and variance ever so slightly between IBIT since it tracks the price of Bitcoin and it's not directly correlative to the price of Bitcoin. It'll be 99.99999% perhaps, but I just old habits die hard. I like tracking the price of Bitcoin more directly. So essentially what the chart is showing is that over different time periods, and if you wanted to zoom in so people can actually see the time periods, or if they can go on Twitter and see it themselves, you have like 90 days, 120 days, 150 days, 180 days, or 60, 90, 120, 150. Those are the typical ranges that you can use in terms of periods where you can try to see price activity over a longer period of time. So on this one, I chose 60, 90, 120, 150. All this is saying is at 150 days, and that's 150 trading days, not 150 calendar days. At 150 trading days, you can explain about 50% of the price activity with MSTR via Bitcoin's movements. And at the different time periods, it has a lower correlation. Now, that's not because the correlation breaks. That's just because over shorter time frames, you're going to have a lot more noise in the data. There's going to be a lot more variance in the data. Over a longer period of time, over a longer trend, you'll be able to see the price activity more accurately. Now, this only starts at May 2025, obviously, because to get a 60-day point, you need 60 days of trading data before that point. But that's essentially what this chart is showing. And I've done this going back all the way till August of 2020. And the correlation is far stronger and far tighter the further you go back. So what does that say? It says over a longer period of time, the price of Bitcoin and MSTR, the price action in MSTR can be explained by the price action Bitcoin more and more clearly. That's a very, very, very general breakdown of that. Now, if you want to go to the actual tweet, what I'm showing is that if you take a look at over the last 60, 90, and 120 days, there's been a break in the price action between Bitcoin and MSTR. Well, if you also take a look at the price action in Iron, Cypher, TeraWulf, some of the other miners, NVIDIA, Palantir, Tesla, the list goes on and on and on. If you see the price action that's taken place, and AMD even, if you take a look at the price action as to just giving you just a very, very general idea, just based on Twitter, what retail investors and market investors could be interested in. And then you say, well, what's more directly correlated with Bitcoin? Well, let's take a look at Iron. Let's take a look at Cypher. Let's take a look at TeraWulf. We can even look at Mara. We can even look at other miners. There's been a divergence in interest between beta plays to Bitcoin. And I don't think it's a coincidence that year to date, Iron is up hundreds of percent, Cypher is up hundreds of percent, TeraWulf is up hundreds of percent. And had the biggest price spikes in that time period where the divergence happens between MSTR and Bitcoin. Now, I'm not saying that it's a causative link. I'm saying that there does seem to be a strong correlation. And it is more beneficial to look at data dispassionately, and then it's more beneficial to form a framework. Why is this happening? And then have a logical framework for it, and then try to do analysis that either proves or disproves it, versus saying it's the ATM, or Sailor's doing this, or mNAV's compressing, or Metaplanet's better, or whatever's better, and then forming whatever narratives you want to off of that with the data that you find. I try to look at it dispassionately. So what I'm saying to myself is, how do I do that? I have to look at the data, I have to do analysis on it, I have to see where there's variance, and what can I do to find a correlative, not causative link between the variance that I'm seeing and what could be going on in the market. And it's not a strong leap to say that in 2025, AI and everything AI related has been hot. I've been posting about NVIDIA, I've been posting about Palantir, I've been posting about Tesla. Last year, I was talking about Iron, Cypher, and TeraWolf for this very, very reason,
I
that
saw
they
that
are
tweet. Yeah.
AI HUC plays. Now all of a sudden we have a lot of mining bulls coming out of nowhere. So I just find it more beneficial to take a look at data dispassionately and try to find those patterns. And I mentioned this specifically because the divergence, and I did another analysis that I should have shared. As Iron's price went up, as Cypher's price went up, as TeraWolf's price went up, and the price action got more and more violent to the upside, the price action and the variance between Bitcoin and MSTR did like this. So again, I'm not saying that it's a causative link. I'm saying that there is a definite correlation, and it helps. It will help investors if they took that approach rather than going with regards to the popular narratives. And then when it comes to ETH and Bitmine emergent technologies, for instance, I did the data all the way back to December of last year, and I did it to October 6th. Not in this chart, in another chart. And that shows spikes more violently. So because then you can go 20 days, 30 days, 60 days, 90 days, 115, 120, 125. You can get very, very, very granular with it. And I did that. Whenever Bitmine emergent technology started spiking, MSTR started doing like this. It was crazy to watch it happen in real time. So again, not causative, but there is a correlation between sentiment on Twitter and sentiment in the market, which are not the same things, and the price action we've been seeing in MSTR and Bitcoin. It's about mind share. It's about market sentiment. It's not about the ATM. It's not about any of these other popular narratives that are taking place.
How does that, sorry to own the mic here, guys. I'll let you go in a second. How do you think that plays out here with the most recent earnings? That's going to be, it's in October. I don't know the exact date. But it's coming out because like the numbers were insane last time, but the stock didn't move, in accordance to like if it was a traditional equity and had revenues spike as high as they did. Do you think Wall Street's starting to pay attention more and figure this out a little bit further? And what do you think will happen? I don't try to make you make all these price predictions here, but like, what do you think will happen heading into earnings?
I think first part, no. Second part, nothing. So I don't think that it's going to have, I don't think that Wall Street is looking at MSTR any differently. And I say that for a few reasons. One, I am still seeing initial earnings estimates that are negative. So what that tells me is, and this is another point I brought up and it gets people rather angry. When it comes to the Bitcoin Treasury model and strategy is a one of one. So let's first have that understanding. Second, it is not as if Wall Street doesn't understand what is being done. I think they don't understand the long-term benefit of it, but I think near term they do have an understanding. So they're bewildered long term. However, short term, I think they know exactly what's going on. And why do I say that? Well, you still have a lot of market analysts calling for a negative EPS. That tells me one of two things. One, they don't know about FASB, which I don't think is the case. Or two, they don't care about FASB, which I think is the case. I don't think the market largely views Bitcoin denominated earnings as valid. And I think that's why the equity is trading in the ranges that it's been trading. If you take a look at its historical price action versus the current price action, the .com high was something like 334, 333, something like that. The 325 to 375 range is like a magnet, and it's being kept there. Now, there are going to be periods of outperformance, which I think we're going to see later in Q4. But what I'm trying to highlight here is that the earnings call that's coming up is going to be great. I think they're still going to show profit. They're going to show that there's going to be Bitcoin denominated earnings. There's going to be all sorts of positive news. I don't think the market cares. Everyone on X cares, but the market doesn't care. And everyone on X is not the market because retail is not moving this trade. Retail will move it at the edges, but it will not move it in aggregate. The individuals that are moving this trade are still the people that hold convertible bonds. They're still the institutions that hold those. There are institutions that have large positions. There are institutions that have large options positions. There are people that play options in size like myself. Those are the individuals that are pushing this trade. And I've even been sharing like options max pain to show people that you don't think it's kind of weird that the max pain price is 335. We keep closing at 335. or 350 or 325 or 315.
Mm-hmm.
I'm not saying that again that it's correlative or predictive, but there is a benefit to taking a broader look at the market. Now, I still think strategy is going to do well into Q4. I still think Bitcoin is going to do well into Q4, but I think the bigger tell is going to be what happens into 2026 and in Q1 of 2026. If we go to 600 and we retrace all the way back down to 300 and then we range there, I think that says that my thesis is correct, that the market just does not care about the Bitcoin treasury strategy. It's innovative. I think it's a very, very beneficial future model. I'm invested. I have a long-term thesis where I'm bullish, but just because I am bullish and just because I have a view on it does not mean the market will. So when we see things like quote unquote mNAV compression, which is a term that I hate, mNAV is a direct representation of market sentiment. And I'll debate anyone, anywhere, anytime about that. What that means is, as sentiment shifts, so will mNAV. mNAV is going to oscillate. There's going to be nothing that can be done to change that. When it comes to how the equity trades, until I start seeing market analysts calling for positive earnings per share in unison, not just one or two of them. I'm talking about all of the market analysts. I'm talking about everyone on Seeking Alpha. I'm talking about people on Yahoo Finance. I'm talking about the entire group. Until I see that being a more accurate representation of the earnings that strategy is showing and that strategy has, I'm still of a mindset that we're going to have periods of outperformance, but we're going to revert back to the mean. And you need to have a longer term perspective and a longer term view of this, and that will help you navigate the pain. If you're trading it, you're going to get chopped up. If you're playing options, I think, like I do and that like others do, that's an entirely different business as well. But even with that, you don't play options week to week typically. You try to play options in a way that allows you to hold your shares, earn premium, and then keep it rolling, right? So that still requires a more long-term view. And sorry, I gave you a very, very long answer, but that's just the way I think.
No, it's helpful, and I agree with a lot of that. I think what you're trying to look for, that catalyst to shift, some of the sentiment. And right now it's, the price of Bitcoin. They came out with all the preferreds, which is interesting. We talked about, I think on a previous episode, like they eventually can get into lending, they can get into like become a bank essentially, but like that maybe several years out. So yeah, it's fascinating to hear some of that.
Well, we do have catalysts that are coming. So even though I think that that markets are largely groupthink and sentiment driven, that doesn't mean that they're not catalysts that can help. So even though sentiment creates the bid, liquidity is going to create the capacity. And I think that once rate cuts really take into effect, and we see the increased liquidity coming into the market, we will have the bid being able to coming in, and we will have the capacity coming in at the same time. And that's when we're going to see outperformance in Bitcoin and MSTR, so on and so forth. The miners right now, we're seeing outperformance because it takes less money to move them. So the trade is quote unquote hot. It takes less money to move the miners, and it has the narrative behind it, AI and HPC, which is what I was trying to tell people about last year, when everyone was bearish on miners. And I would say repeatedly, I'm not bullish on Bitcoin mining. I'm bullish on HPC and AI, and that's why. This is why I was saying that. So, but to see that outperformance, I had to hold since last year. So again, time in the market is better than timing the market. And if you're going to maximize your time in the market, you need to understand the market. Stop running with narratives and start doing some analysis.
Love it.
I guess to follow up on one of the things, or a couple of the things you said there about the market more generally, Adrian, I think he's kind of said two things that might seem at odds, but correct me if I'm wrong on this. So one is, we're not seeing the analysts price the earnings for strategy appropriately in terms of how they're doing it for FASB accounting. And at the same time, you've mentioned that you believe that the market, Wall Street, knows what this trade is, that Saylor's doing it, and they're just kind of like shifting it over to the side. And to me, what I come away with there is kind of like I don't want to say two different narratives, but almost two different groups of people. There are the analysts, but then there's also the money, and they're different sides of a lot of these banks and everything like that. And I think that that's something that a lot of people may miss. I guess, trying to dig in a little bit deeper. And Avi, I don't know if you can pull up that chart of the MSTR stock to Bitcoin over gold. This was one I think you retweeted out yesterday, Adrian. And just
Yes,
comparing
yesterday or
that
the
and
day
the
before.
miners. Yeah, and I saw it this morning, and then I saw you retweeted it after. But I guess, as we're looking at, MSTR and those things, what do you think the catalysts will be specifically for that Wall Street money to flow into MSTR if and when that happens? And I'm not saying that that's a Q4 thing or a 2026 thing versus a 2030 thing, but what do you think those catalysts will be? Is it just, a slight sentiment change amongst us investors plus more liquidity, or is there more to the story there?
I think there are a few things to the story. So let's take it a step back. One of the things that I'm less popular in the MSTR community for is the fact that I think that everything is downstream from Bitcoin. MSTR is great, but as Bitcoin goes, MSTR will go, right? So that's why Bitcoin is my primary focus, and I think everyone's primary focus should be Bitcoin. Why do I say that? Well, let's take a look at what's happened to Bitcoin since the ETFs have launched. Price has gone up steadily, volatility has gone down steadily. So we have a reality where Bitcoin is now becoming less volatile and more valuable. What does that say? I think it says that Bitcoin is becoming a maturing asset, and it's going through that cycle. Now, one of the corollaries that people bring up is what happened when the gold ETFs launched, and how gold just kind of went on a tear for 6 years. It really wasn't a tear; it was more of a stair step up and to the right. There were periods of correction, there were periods of consolidation, but it still kind of ticked its way up. That's part of my overall thesis as to what I think Bitcoin's going to do. I call it the stairway to heaven. I think Bitcoin's going to go up, consolidate, go up, consolidate, go up, consolidate, and it's going to bore the hell out of everyone. And it's going to go from 150 to 160 to 170 to 140 to 180 to 130 to 190, and that's what it's going to do up into the future, unless something larger happens, like if there was World War III with China or something, we're all fucked. So, outside of that kind of a tail event, I think that that's likely what's going to happen. Now, why is that important? As Bitcoin becomes a more important systemic asset, and as Bitcoin becomes more systemically relevant, and as Bitcoin becomes less volatile, the perception around Bitcoin will change. Right now, Bitcoin, even though it's at over 2 trillion in market cap, people don't care. Wall Street sees it as another asset. The market sees it as another asset. There are individuals within the market that see its value, such as ourselves and others that are the other Bitcoin treasury companies and so on and so forth, that see its value. But broadly, the broad sentiment and the broad thought process behind Bitcoin is either don't know about it, don't care about it, or so what. That's largely the vibe I get when I talk to individuals on the street that I'm still trying to orange pill after all these years. I've been talking to them about Bitcoin when I was 20. Then when it was 50, then when it was 60, then when it was 80. Now that's over 100, they're still like, eh. So that tells you a lot about where we're at. Now, that's not disparaging Bitcoin. The reason why I'm saying it's because it's a maturing asset is because a maturing asset still needs to go through this trend. Now, as a maturing asset that's growing in market cap, that's growing in price, that's decreasing in volatility, that makes it more attractive to a larger cohort of investors. And ironically enough, Bitcoin's future growth is not going to be violent 6x's and 15x's and crashes. And I think that happened for a different reason that I don't know if we can get to in this call. But the reason why that's important is because as the perception around Bitcoin changes, and as people view it as a more legitimized, stable asset, and as people start to view it as more of a macro asset, the perception of everything around Bitcoin will change. So when that shift happens and Strategy is the company with the most Bitcoin on their balance sheet, that's the catalyst. Then everything from the preferreds to their holdings to the overall market perception of Strategy changes, and then it starts to get bid up. Now, even with that said, I do not believe it is sufficient for them just to have the preferreds and just have the Bitcoin on the balance sheet to command a larger multiple in the market. I think they're going to have to, for lack of a better term, weaponize their Bitcoin. That comes from finding different ways to generate yield. That comes from offering different kinds of products that they haven't conceived of yet or that don't exist yet. that comes from various different credit instruments. I think they're going to have to find a way to take the Bitcoin that's on their balance sheet, transmute it into fiat, have that be a form of traditionalized earnings that they can then use a variety of ways. That includes, and this is again where I'm unpopular, scaling the BI business. If they're not going to scale the BI business, I think they need to cut bait with it right now and move on. If it's going to be part of their future, they need to weave it into their future and think about how they're going to grow it. They don't need to become the next Microsoft, Palantir, or anything like that. If they can just find a way to scale that BI business 2 or 3x, which is very, very doable, especially given the AI boom that we are in right now, that's going to command a higher multiple from the market. So once they have, if they choose, the BI business that's been scaling or that's become more viable and that's grown, and they have found ways to take the Bitcoin and actually generate a scalable, marketable, very, very easily trackable business that they can then generate revenue from, I think those are the catalysts that lead to strategy having a much brighter future. And that will lead to some really significant outperformance compared to other equities in the market, even more so than it's done now.
So just to go back one piece, so you're, I don't want to say bearish on the preferreds, but you don't think that that's going to be enough to command a premium for Strategy's price over mNAV, basically, or net asset value. That alone won't do it, even if they're getting, you know, hundreds of billions of dollars in inflows from the various buckets of that money. Is that kind of your thesis there?
Well, so here's where I have to be honest with what I'm saying. I don't, and I'm going to weave in other parts of it. I don't think the ATM impacts price, right? But let's go into the future here. If the preferred scale, and how are they going to pay for them? The common stock
ATM, most likely. Yeah.
At that point, you do have a reality where the ATM as it exists right now goes into order flow, right? It's a function of price. It is not a driver of price. You then create a future where the ATM can become a driver of price, because there's a reasonable probability that trading volume will be low, price will not be cooperating. You have a large cohort of individuals that are in the preferreds that you then have to pay the dividends on. That becomes problematic. So as it stands right now, it's not that I'm bearish on the preferreds, it's that I have to have a more nuanced view. The preferreds will not scale without the common stock scaling. That's a very, very simple thing that I'm saying there. What I mean by that is the common stocks are not going to perform. And because the common stock performs, it attracts more investors. By attracting more investors, there'll be more investors will become interested in the preferreds, and the preferreds will get a higher bid. There'll be more holders of the preferreds. They'll have higher trading volume, so on and so on and so forth. I think it's still very, very reflexive. The preferreds will do well because the common stock is doing well. Okay. However, if you are in a prolonged bear market, or if you are in a scenario where you have the preferreds, they have a lot of interest, okay, that's great. You have the common stock that's doing well, okay, that's great. It's very easy for the market to say, okay, what else? And that scenario is where I become nervous, and I say, if there's no what else, it becomes an activity where you can put excessive amounts of pressure on the common stock, and they still have the dividends to pay. They can pay them. I'm not saying that they can't, but what I'm saying is, at that point, I don't want them to get trapped in purgatory, to have no way of escaping, to have no means of escaping besides Bitcoin's price cooperating. And even as we've seen, because of market sentiment, Bitcoin's price cooperating doesn't necessarily mean that strategy is going to operate in tandem. There's other things that can come into play. The AI trade, that has caught everyone off guard, not because no one saw it coming, but because it keeps going. It hasn't abated. NVIDIA just made a new all-time high this morning. Palantir's made several all-time highs. AMD is making all-time highs. You have all of these companies making all-time highs. Even though Bitcoin is making all-time highs, strategy is not making all-time highs. And again, it's not because of the ATM, it's not because of Saylor, it's because it's about attention. The markets run on attention, they run on sentiment, then they run on liquidity, in that order. Fundamentals comes last. If it was about fundamentals, Palantir would not be trading at the multiple that I was trading at right now. So when that attention gets taken away from the common stock, things become problematic. So in the future, it's not that I'm bearish on the prefers, it's just that I realize the new dynamics that they bring into it. It's no longer just a common stock. You've now added other layers to it that must be taken into account.
What does this mean for some of these other treasury companies? I think strategies, as we talked about, kind of this 1,000-pound gorilla in the room, where they may be able to sustain it, may stay in purgatory. But do you think a lot of these guys are going to get wiped out? And I agree with you. I don't think we're having a 90% drawdown again. I think it's, it is starting to become a much less volatile asset. But let's say 40%, I think you mentioned a while back on a podcast, or 30%, like these non-operational Bitcoin companies, do you think that they'll stick around, or, from a attention perspective too, it's like, why buy this coffee company that has a half of Bitcoin, right? You see a lot of these treasury companies popping up that I think they jumped on it for the opportunity and the attention at the time. But as you're talking about, the attention is shifting away. And so some of these long-tailed, treasury companies may disappear. I'd love to hear your thoughts on that.
So I think that mergers and acquisitions are going to be something that becomes more common. So we already had the with Strive and Semler potentially. So I think that can be a likely course of action. Do I think that they're going to fade away or fade out? Well, let's define that. Does that mean that they sell their Bitcoin and disappear, or does that mean that they keep all their Bitcoin and just don't acquire anymore? I think those are two very different features. Even if some of these treasury companies fail and they started selling their Bitcoin, I don't think it matters. The only thing that's going to really harm the space is if strategy starts bowing out and dumping Bitcoin onto the market, right? But if some of these smaller companies go away, I don't think it matters. Do I think some of them will? I think that's just the law of averages. In business, you're going to have people that succeed, you're going to have people that fail. That's just the nature of what business is. So you're obviously going to have some that quote unquote fail. But the reason why I said, does that mean them selling their Bitcoin, or does that mean them no longer acquiring any additional Bitcoin? I don't know if I see a scenario where a lot of these smaller companies start dumping their Bitcoin onto the market. Do I see a scenario where some of them hit pause and maybe reassess, and do I see a scenario where some of them can potentially say, we tried it didn't work for us, we're going to try to leverage our balance sheet now that has been bolstered by Bitcoin to see what we can do for the core business? Yes.
Yeah, it is. It's interesting. I like what you were saying with the operational, because now I'm thinking with strategy, like at some point they need to be able to pay those dividends, and you can't just have the same story. You definitely need to improve an actual revenue stream that's coming beyond that. So very interesting. Ryan, I know you've been quiet up in the vineyard state. So what you got?
It's too beautiful out here. Yeah, I was wanting to talk earlier when I think we had 444 viewers. I thought that would be a great time to hop in. It's probably Josh listening in. No, great stuff, guys. So just taking a step back, you were talking about the maturity of Bitcoin, and I think I was listening to, it was either yesterday or the day before on True North Now with Pierre. You coined this concept of a volatility shield. I have a follow-up question, but just for the viewers that are listening right now, do you mind explaining what a volatility shield is in terms of Bitcoin treasury companies acting as a volatility shield? And then I'll follow up.
Yeah, so I don't think it was I didn't coin it. So Bitcoin Pierre has his own version of it. I think Swan was calling it a volatility shield, and that's what I remembered. And I call it a surge protector. All of it's the same kind of concept. So what that means is, kind of tying into the previous question, is that in the case of a prolonged drawdown, these Bitcoin treasury companies, the equity is going to absorb the vast majority of that stress. Because if you take a look at what's going on right now at all these treasury companies, there's a drawdown, but they're not selling Bitcoin. But what's absorbing the stress of that? It's the equity itself. So that's what a volatility shield means. It means in a very, very general sense. If there's a drawdown, the pressure is not going to be on Bitcoin directly. It's going to be on the equity. And because of that, that doesn't allow Bitcoin to be as volatile, with a lot of people selling in the market and creating excess volatility. It also kind of plays into what I was talking about with regards to the ETF launch. Bitcoin's volatility has been ticking down while the price has been ticking up. I think all of that is a function of the ETFs and the corporate adoption, because it's a different investor base. Previous cycles, in my view, weren't driven by liquidity, as some people think, and it wasn't driven by the halvings, as other people think. I think it was driven by stimulus. And the boom bust that we saw was because of the wide amount of stimulus that we had printed between 2008 and 2022. That's kind of what we saw. And the phrase that I use to kind of explain that is that liquidity seeks quality while stimulus seeks speculation. And while stimulus might bring in liquidity, it's not the same exact kind of liquidity. It's hot money. It's hot money that's going to look to rotate in and out of the market very, very quickly. We've had higher interest rates now. We've had liquidity slowly ticking up, and Bitcoin has been ticking up in price, and equities have been ticking up in price in a very, very sustained sense. Even though we had tariff Armageddon and the market dumped, and we had other kinds of events, the prices for all equities, well, not all, but like Mag 7, Bitcoin, others, and correlated assets have been ticking up pretty consistently, even though we're not in a zero interest rate environment like we have been in the past. And even though we don't have the COVID stimulus printing and the subprime mortgage meltdown printing and stimulus and so on and so forth. So the volatility shield is a function of having different players in the market. Corporate holders are not going to be as likely to just dump their Bitcoin and run away as some dude in his basement going 100x degen long is, right? It's an entirely different base. And equities, in a way, are preventing Bitcoin from experiencing that kind of volatile jolt, and it's allowing the volatility to go down, but it's allowing the price to go up because you have more holders. And as more supply comes into the market, that is being taken up by the ETF. So a lot of it's being taken up by strategy. It's being taken up in little bits by the corporate holders. All of that in aggregate is causing a holder base versus a selling base. And as of right now, I think that, as we just said, until something changes, it's more likely for corporate holders to stand pat than they are to dump their Bitcoin in the market. So the volatility shield is that the equity is acting as a shield to Bitcoin experiencing the price drawdowns.
Yeah, and I'm on the same page as you in terms of where Bitcoin's going. I personally think the 4-year cycle's over. I do think we continue to stair step into boredom oblivion. So when I look though at this volatility shield that we're talking about, I do naturally think what breaks the volatility shield, and we've already touched on it, right? A global macro slowdown that's prolonged. I was reading the other day that UBS says there's a 93% recession probability, and Moody's says there's a 48% recession probability. I kind of have a hunch that these guys are just completely guessing, but just to entertain the reality that this may come to fruition, and we see a 4, 6, 8 month long slowdown and sentiment, as you mentioned, tanks. Then what? These companies' market capitalizations fall below their net asset value. They can no longer raise capital. And as you mentioned, some of them have to merge. A lot of the smaller ones tank. You touched on this before. I think it's a really important part. You mentioned strategy, scaling their BI business. I think that's actually brilliant. I love that idea. Are there other mechanisms that you think some of these mid-tier Bitcoin treasury companies should potentially be looking at now, while things are stair-stepping up and, God forbid, any prolonged pullback? But is there other mechanisms that you think they should be looking at now? I'm not saying it will either, but yeah.
Yeah, so let's touch on a few things here. Firstly, all these banks and firms, they've been predicting a recession for 4 out of the last 3 years, right? There's always someone talking about a recession. So let's put that to the side. In terms of broader market events that we can't really predict when they're going to happen, that's why they kind of catch people off guard. But let's say that they do. Is it possible that companies start selling off? Sure. I think that, again, it's not really going to matter. If you take a look at some of the companies and the holdings that they have, them selling Bitcoin is not, I don't think it's going to drive the price down. I think it's going to create a narrative that can drive the price down, perhaps near term, but it's not going to create a FTX-like situation where everyone just starts dumping Bitcoin. If anything, I would see those Bitcoin very rapidly ending up in the hands of the ETF or in the hands of strategy. So that aside, what can break the volatility shield? All those things that just were mentioned. But that again would be an event where you have these companies that are experiencing such a long, prolonged drawdown that they have no other option but to sell the Bitcoin. Is that possible? Of course. What can they do to prevent it? My view, and again, this is where my view differs from many in the space, I don't think that it is just a matter of buy Bitcoin, hold Bitcoin, buy more Bitcoin. I think you have to find, and it's not just about how you acquire the Bitcoin either. Capital raises, that's great. Non-dilutive measures, that's great. Cash secured puts, that's great. All that's fantastic. But what are you going to do with the Bitcoin that determines the market should be paying attention to your equity? That, in my view, is the next phase. Phase one was strategy being first out of the gate. Phase two is what we're seeing right now, and strategy with the preferreds, for instance, and like Metaplanet looking at them, and Strive looking at them, and Semler was looking at them, and others were looking at them. Phase three is where I think things get very, very interesting. And companies are going to have to start to innovate and find new ways to leverage the Bitcoin on their balance sheet. I think that is what all of the companies are going to have to do, unless they make the decision to completely abandon their legacy business and, I don't know, become some sort of a small tier Bitcoin bank or some kind of a player in the market of some kind. I don't know. We can conceptualize that all kinds of different ways. But that's kind of my view on it. I think they're going to have to innovate. I think that the strategy model has been successful, and it is successful, but more along the lines of what I've been talking about with attention, sentiment, narrative, driving markets. The market's kind of like, all right, that's cool. We've seen that. What's next? And the what's next is going to be, for lack of a better term, weaponizing the Bitcoin on balance sheets and finding new ways to generate revenue from it.
So I guess pulling on that string a little bit more, what companies have you excited for things that they're doing? Obviously, Metaplanet has their cash secured puts. I know Liquid in Canada, has done lightning channels, and I think B Hodl in the UK wants to do similar things. And I guess, you have XXI where, Jack Mallers is involved and he wants to do some of those things. And I think the same thing with B-Star, Adam Back's company. So what companies out there have you heard are doing things with operating businesses that excite you, or have legacy operating businesses that I think excite you?
None. One was Similar Scientific.
We'll let that marinate for a sec. Yeah.
So again, my exposure to Bitcoin treasury companies, and let me just be fully transparent. I own Metaplanet, for instance, right? That has nothing to do with their core business and everything to do with what they can do in the Japanese market. I own Smarter Web. That has everything to do with what they can do in the UK market. I've had exposure to Capital. That has everything to do with what they can do in the broader European market. Notice how there's a difference in what they can do in different markets that they feed, right? In terms of core businesses, the one I had hope in was Similar Scientific, and but they've decided to become, they're being acquired, so that's no longer a viable option in terms of the core business. But that doesn't mean I'm bearish on the space. That just means I'm taking an honest appraisal. The companies I'm exposed to, in my view, have a differentiating factor. So I think the more accurate description, in my case, could be companies that have a differentiating factor. If you take a look at DDC, for instance, they have a core business, but I think their clear focus is Bitcoin. So, but again, they also have more probably institutional exposure in the Hong Kong markets, right? again, differentiating factor. They at least have something that they can say is different, or a thread that they can pull on to say that is different. That is why I've talked about them. That is why I have had exposure to some of them. But broadly in the space, I don't think there's any core business of anything that I currently hold as far as Bitcoin treasury companies. This does not mean Bitcoin miners. This does not mean adjacent plays. Companies that have stated that they're doing Bitcoin treasuries, the ones I am bullish on is because, or interested in, is because of what they can do as Bitcoin treasuries that have nothing to do with their core business.
Mm-hmm. So it seems like you love, or you're kind of guiding more towards operational Bitcoin companies. In terms of traditional equities coming into the market as that second wave, do you think that's something that we could expect over the next 6 months or a year? I don't know if it would be like a Nike or an Apple.
Again, you're breaking up on my end.
You guys hear me?
We can. It's a little choppy. Try again, Avi.
Okay, I'll try again. Otherwise, if one of you guys get what I'm asking here. So in terms of traditional equities companies that are operating with no Bitcoin on their balance sheet today, like a Nike or an Apple, for instance, do you see any big names or mid-tier names adding to their balance sheet, and they have a very successful operational business today? But do you think we'll see any surprises over the next couple quarters of, you'll see it during the quarterly earnings that they now have added Bitcoin to their balance sheet?
No. But the reason why I say that is because I think that comes after strategy gets S&P 500 inclusion. When strategy gets S&P 500 inclusion, that legitimizes the model, that legitimizes Bitcoin-based earnings. And if you are a company that's on the fringe of inclusion, for instance, in an index, or if you're on the fringe of inclusion in the S&P 500, you now have a very clear path towards getting inclusion, if it comes in terms of earnings, and so on and so on and so forth. I also think that would legitimize the model in a very, very different way, in the sense of the S&P 500 globally represents the largest index, right? So if the largest index in the world has a Bitcoin treasury company at the heart of it, that sends a very, very distinct signal to all companies that this is a legitimized model. Even though I already think it is, I think that's the buy-in. That's the buy-in point. That's the inflection point for me. If you want to talk about a true catalyst, not necessarily in terms of just price, but in terms of broader market perception and global perception of what these equities are doing with Bitcoin, that happens. Then I see NVIDIA, Apple, Meta, Tesla increasing their holdings. I think then it becomes a matter of, well, why wouldn't we? They probably hold bonds and other kinds of assets on their balance sheet. So why wouldn't they say, let me just throw a few $100 million or a few billion at Bitcoin and have that on our balance sheet as well? Then it makes more sense. Right now, I think it's still much too much of a headache for a lot of these companies in terms of what it says to the market. Will your investor base say, well, are you a Bitcoin treasury company now? Will they, create an inadvertent negative narrative because they're deciding to hold Bitcoin on the balance sheet? I mean, if you're NVIDIA, one, why do you even need Bitcoin or anyone in the Max 7? Why?
Right.
There's no benefit for you adding
I'm
it on
thinking
the
like
balance sheet.
the dead stocks, like, I haven't, to be fair, I haven't looked at GE, but like these companies that have been around that are, the zombie companies, as Semler was talking about.
Yeah, I was just, thank you for mentioning that. Eric Semler, we're talking about the zombie companies. I think that's a course of action, but even still, I think that becomes more palpable after S&P 500 inclusion. Granted, you can have someone that fumbles it, like GameStop, right? They buy, a bunch of Bitcoin and they buy Pokemon cards, and well, we all saw how that played out, right? So it's not going to be a guarantee of adoption just because the path is cleared. I think it still needs to have a broader perceptual and sentimental shift, and I think that's what S&P 500 inclusion brings. But even still, you're going to have companies that are resistant to it. The zombie companies, I think, are zombie companies for a reason. They are in a position where they could be they're very successful perhaps, but there's not a lot of room for maneuvering. And that's kind of what Saylor was talking about. That's kind of what Eric Semler was talking about. But if you take a look at what's happened, strategy, the reason why they were so successful is because they are the Leviathan in the space. They were first out of the gate and they got first mover advantage. I think what we're seeing right now is that the other companies that have adopted this treasury, they don't have that benefit. They're going to get that initial market pop because they've announced it. But if they don't differentiate immediately, you're going to start to see things retreat a little bit. And I think all of them are going to do well in Q4 when Bitcoin starts cooperating more. I think that is going to happen. But once that move happens, I think the market is very, very quickly going to say, well, what's next?
Mm-hmm. Yep, I agree. Ryan, Brian, you guys got any other brain busters? I know we're coming up on time, so if maybe got one last one.
I mean, I have a theory, and I like you to poke holes in it because, you know, I wonder if this is an option. And I had brought this up in a previous spaces with Avi and Jody. You know, you talk about kind of investing in operations, and you talked about strategy and BI. I wonder if some of these mid-tier treasury companies that would be at risk in a long downturn have the opportunity now or in Q4 as they have more cash on hand to go out and potentially acquire. And this is kind of straddling two worlds, so bear with me here, but go out and acquire a boring business, a cash flowing business that's mature, boring. You keep the exact same team operating the organization, but it's pumping cash. And just to give you an example, like a size company for strategy could be someone like Johnson Controls or Train Technologies. These are boring HVAC companies, but if you look at their quarterly, how much cash they're pumping out, acquiring a company like this, I'm not saying strategy would, but acquiring a company like this during a downturn would enable them to pump that cash into continuing to buy Bitcoin, regardless if they could raise or not. So my question is, or I guess poking holes in my theory is, am I off here? Are there cash cows out there that some of these mid-tier or smaller treasury companies, and not Bitcoin reserve companies, but Bitcoin treasury companies whose sole goal is increasing BPS, would that be a good strategy, or am I missing something here?
Well, is it possible that mergers and acquisitions of legacy businesses could be a good path? Sure, but I think it would have to, one, it would have to make sense, and two, it will have to make sense from a capital standpoint. And what I mean by that is it going to move the needle? Acquiring some random company that has nothing to do with your core business or legacy business, I don't think makes sense. So in the case of strategy, I mean, here's one hypothetical that I threw out and people screamed at me for. If they had taken a little bit of the ATM equity offerings and the capital raise from the preferreds and the converse and all that stuff and built up a cash position, and then they acquired a small AI company that's working on language models, or they acquire a small analytics company or something like that, right? That would be something that can get attention from the market in the sense of it is aligned with their core business. If they went out and they just bought a company, like for instance, I don't think it makes sense for strategy in the case of this downturn that we're talking about to buy another Bitcoin treasury at this current juncture, because they'll be buying it just to get the Bitcoin. Okay, great. Then they have to divest the legacy business, and it's a lot of a headache to go through that, right? Something like that makes more sense for Strive to do, which is why I think they're doing it, right? But acquiring businesses, I think that could be par for the course. I think that could be coming, but it would have to make sense. It's not just a matter of saying they're cash flow positive, the market's going to react to it well, let's do it. It has to align along all verticals. So if they're still going to have the Bitcoin treasury, how does acquiring this business enable us to more effectively raise capital to buy Bitcoin? Mm-hmm. How does acquiring this business make sense for us to become more cash flow positive and generate more revenue and generate earnings and be able to acquire more Bitcoin and scale the business? And how does this make sense in the market? Is the market just going to perceive this as a reach to say, okay, we're just trying to figure out something to do, or is the market going to perceive this as an actual worthwhile endeavor? I think those three things have to be answered. I could probably come up with more, but those are just the ones that come off the top of my head.
Kind of following up on that, though, and I'll try to keep this brief, I guess, thinking about it, they'd have to find something where it was beating the hurdle rate of Bitcoin, or they were opportunistic, I guess, about taking on debt to purchase a company. And rather than kind of looking at those bigger, I don't want to call them legacy companies, but just, operating businesses like that, it almost made me think, instead of going into something that's established AI, could they have almost a venture fund into small AI plays or specific things that they can identify with their BI business that would be a need, and invest in small teams that they think would potentially outperform and they can operationalize because they have that background and everything. I'm thinking out loud. I don't know, Adrian, if you have any thoughts on that, but to me, it was just something that might be a little bit more, I guess, ultimately accretive in terms of the long term for Bitcoin. If you placed, 10 bets or something like that, that you operationalized the ones that really, made sense versus just trying to buy, I don't want to say a boring elevator business, but something like that that may not beat Bitcoin's hurdle rate itself, right? So you're borrowing or using funds for something that is just going to give you cash flow.
Well, so I'll answer it in a different way. What was so revolutionary about what Sayer did is that he identified an adoption curve, and he got in early on that adoption curve, or relatively early on it in terms of corporate adoption, and he's benefited from it tremendously, right? They went from 1 billion to over 100 billion in market cap at one point, okay? Why do I say that? To really, I personally don't like, while I like Bitcoin, I don't think it should be the sole tunnel vision focus. There are broader market dynamics at play right now. So let's with regards to strategy and your example, I think it would make sense for them to look at ways to operationalize and scale their BI business in the way that you mentioned. Because if, again, they don't need to become Microsoft. The reality of it is, even if the AI trade were to collapse tomorrow, the genie's out of the bottle. LLMs are not going anywhere. AI is not going anywhere. When the dot-com bubble crashed, did the internet go anywhere? No. Adoption actually kind of went exponential, right? So if they were to say, we are already on this Bitcoin adoption curve, we already know that Bitcoin's going where all of us on this call think it's going. It's going to become one of the premier assets in the world. What can we do to weaponize our process along that curve and to find ways to, one, acquire more Bitcoin and to scale? They need to look at ways to scale the BI business in ways that make sense. The reason why I've been kind of pounding the table that we need to scale the BI business is because of what I do day to day. Day to day, I work with clients that have three primary needs: onboarding AI tools and working out all the nuances of how to do it, integrating legacy systems into new systems, or migrating from legacy systems into new systems, and broader scale business and data analytics. And that's everything from designing middleware solutions to cleaning data that came out of a legacy green screen system. So by green screen, I mean AS400, Fortran, COBOL, all those kinds of systems that many banks, businesses, hospitals across the entire country are still on. It's 2025 and they're still on green screen in the back end, believe me. Finding ways to migrate that data into new systems and finding ways to leverage that. What has Palantir been doing? Just in case anyone's wondering, they found ways to take your data and make it actionable. So you take data from disparate systems, you consolidate it, and you find new ways to action yourself and find ways to, either if you're the military, find you tactical information. If you're a business, find new ways to make profit. If you are a hospital or a pharmaceutical company, you're finding ways to consolidate different from disparate systems to find new insights. That's what they do. The version that strategy can do, in my view, helping companies get from legacy to future state. That is a huge opportunity there. I, by myself, at one point, have juggled 5 clients doing this. And I've been able to do it with AI. Why? Because I help them automate their processes. I help them automate their data processes. I help them automate their integrations. I help them model and deploy AI tools either on-prem or in the cloud. All of that is an area where strategy can come in as a small player, work with small businesses, and help them do that. That right there is a revenue stream that can last in the next 10 to 15 years. Because the transition from what everyone right now to what everyone assumes is going to be some kind of God tier AI, which is not going to happen, by the way, but that's another story for another day. The transition right now, everyone focuses on compute and everyone focuses on energy. The other bottleneck is data. Companies are not ready for it. Your LLM locally run is going to give you garbage if you feed it garbage. Just like when you give it a bad prompt, just like when you give it, when it searches online and it finds sketchy Google results that really don't apply to what you queried, there's a reason for that. It's because the next bottleneck that no one's talking about is data quality and data integration and the effective way to scale data, to take it from legacy to future state. That is a business that strategy can find a stranglehold in. And they don't need to become Palantir to do it. They don't need to become Google. They don't need to become Microsoft. They just need to scale 2x or 2.5x. That is very achievable. If they do that, that by itself determines a higher multiple. And given the trajectory that we see things that are going on, anything AI, even in a crash, anything that's good with AI is going to command a higher multiple from the market. It's going to have all of the tailwinds it needs to scale. They just need to implement it, and that's just my view.
I love it.
Thank you.
I personally tend to agree. I came from a world where the market made sense, where things were fundamentals. That's not the market that we live in anymore, and so it's totally interesting. So we'll bring you back to talk more AI because that's fascinating, and I agree overall. Guys, Ryan, Brian, thank you so much for popping on, and Adrian, always a pleasure to bring you on. For the 935, I think we got listening right now. Every Thursday we'll be coming on. We have CEOs next week. We'll probably put together a schedule so people can kind of track that. But every week we'll be doing these Treasury Thursdays. So thanks so much for listening. And Adrian, thanks again for popping on.
My pleasure. Anytime.
See you guys.
Thanks.